last Tuesday, we got a big breakout. We talk about this bar with the increasing of the supply, and this rally is very weak. But this Tuesday bar caught me by surprise. We got a commitment above this resistance level. It's quite obvious that since last Tuesday, there is this big breakout bar followed by some profit taking. There's efforts versus results show up right here. Similar volume for these two bar, but look at the progress to the upside. It's little. Instead of having this much progress, we only have little progress. Around 1/3 of the progress of this previous bar. What's actually keeping the bar from moving up is a supply. There is supply within this bar, within the volume, and followed by a few more churning bar. We got rejection tail, but still quite consistent volume. Volume is normal. I wouldn't say it's threatening, but in terms of the progress, and we see that there's a lot of the rejection, suggests that there's a lot of the profit taking and a lot of the selling showed up right here. The great thing is, first, I talk about this is weakness, but since we have the breakout last Tuesday, this is a meaningful rebound. This is a meaningful rally out from this oversold condition. It's just delay a little bit, but still we got this meaningful rally. And in terms of the supply level is just normal. I wouldn't say it's high. This is healthy. Instead of having this kind of the situation, a ton of the profit taking with spike of the supply, volume is normal. There's a bit of the supply, not that extreme, not that threatening. This is another sign of the strength. Instead of a ton of people selling into strength right at this level, the rejection tail or the previous supply level, there's not as many as we thought of. That is a good thing. In terms of the bull, this is showing some strength. Although there is some resistance and stalling right at this supply zone, the resistance zone is a lot better than the weakness show up right here. In terms of the short-term price action, it's clear that this is a resistance zone. I box it up in red, a resistance zone. And as long as it's fail and commit below, means that if it close below something like this, if today close below with a bearish bar, likely we just come down to test the first level. The first level is shown up in this green box. So it's somewhere around 44.80. This is the most bullish case. Come back to have a test with normal supply or even decreasing, then likely we can expect it to go up. In case this failed to hold, then it means that it will come back down to test the next support levels. Instead of having to test the 4300, which I mentioned several times, this is a more meaningful level. Indeed, it still is a more meaningful level, but because of the structural strength show up, we have a meaningful rally right here. And in terms of the rejection at the resistance zone, I don't see a ton of the supply coming out yet. These 2 points make me think we could have a higher low test instead of a lower low test. Instead of going back and break down to test 4300, then likely we'll have a higher low test. First level is 44.80. This is the most bullish case. If we can get support and bounce up from here, then I will continue to go up to test the previous swing high level, 4600. If this level failed to hold and with some spike of the supply, then maybe we have another complex pullback, not the simple pullback. We have another leg down to test this next level, about 4400 to about 44.30. So 44.10, 44.30. This is the next support zone. Short term, I expect if it close below this red box, then likely we'll have a reaction. The most bullish case is without the reaction. It means that although we see that there is rejection tail and also some consolidation right here, if we get a resume of the rally, means that the supply failed to push a bull away and have another breakout, then this is the most bullish case. Then it would continue to go up until it finds increasing of the supply. This is the next access level, 45.60, and then followed by the gap. There's a gap right here. That is the resistance, and then another resistance at about 4600. So 4560 to about 4600 is the resistance level. If it can have this kind of the bullish action close above the red box, then it would go up. Now we need to wait for the confirmation as shown in the price action. If it close below, then likely will have a reaction. If it close above, it would have to go up to test the next resistance level. The most important thing is that last week, although there is a stalling or the rejection in the index, a lot of the stocks in the watch list keep rallying up, or at least is holding up the gain. That is the most important thing. The stocks that you buy, you're holding, actually outperform or holding up the gain. That's S&P 500. And in terms of the medium term, doesn't change. We still have this sort of the reaction. And now we just right at the resistance level. It could turn out to have a few more tests here and then to consolidate, or have a more bullish case, a test followed by a move up. We just need to wait for the structure to unfold. And long term, this is still supported by the up channel. The mid of the up channel, which is here, proven as a support so far. Bounce up from here and then rallying up. We can see that this is the overbought line. Hit the overbought line plus the supply zone, horizontal supply zone, then it just stalls. This is quite a natural place to have some rejection. Nikki say head and shoulder. Good observation, Nikki. Yes, it is. If you spot the pattern, it is head and shoulder. This is the head, that's the shoulder, and then this is the right shoulder. The first shoulder, we got a breakout. Now it's actually another shoulder. If this shoulder form and then break down, then this is a head and shoulder pattern. We got shoulder, head, shoulder. Then if you want to bet on the downside, means that it needs to break down here, break below this swing low, and then to go down to test 43, or even go to test the demand line. That is the worst case. There are still a few more support level that you need to break. First level, second level, third level, in order for this head and shoulder pattern to become valid and then go down. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.